Hello folks, and welcome to another Bitcoin market analysis by Inspocrypto, or as you know, I redefined my analysis and I renamed it in pump and dump market analysis because that describes in particular also related to Bitcoin its market conditions. It's pump and dump, pump and dump, pump and dump. So before we start, and I'm starting today my analysis with a fresh reinstalled PC, so hopefully without any trouble anymore. That's something I look forward to do it. And but first of all, I would like to use the first minutes, and I'm going to use a different chapter. So if you want to skip that, it's really easy. You go directly to Wills ratio and you can ignore what I'm going to say. First of all, 2 points. Point number one, some people are asking me why I'm staying away, why I'm not trading anymore like I did in the past. And the second point is I received a comment on YouTube where someone I have mentioned about that the EU is going to release the CPI data this week, expecting a rising inflation in the European Union, and have mentioned that of course the ECB will try to rise more the interest rates. And I said that's not bullish at all. And someone said, but hey, Inspo, I mean, interest rate hikes are not really, I mean, that should have a positive impact for the euro. And I will give you a little insight about the economy situation in the European Union, because I think that some people think that's the US. We have completely different problems and different economies. Even the conditions are completely different, also related to the central bank. So I will talk about that as well. First of all, let us start why I'm staying away at the moment. Well, first of all, I have traded this weekend because it was obvious for me that they will try to retest the area of 25K. But my big problem at the moment is I was someone trading with low leverage, but with big volume. For me, everything between 20 or up $20,000 is big volume. Okay, so everything up with big volume related trades is at the moment under the current market conditions, in my opinion, not possible, or at least risky. I will tell you why. For me, the whole situation, it at least it popped up very nice to see that even exchanges like Coinbase could be in trouble, or Gemini, for example. And we have noticed that some exchanges even stop withdrawal operation for their traders, freezing their liquidity. Well, I mean, it's okay. It's fine for me if I have some couple $1,000 to trade, and just for 1 month or 6 weeks, they will stop to withdraw or to let withdraw my money. Even it would be pain and a big loss in trust, but it would be okay. I mean, I don't need to pay my bills with that, and so on and so forth. But big volume, it's different. And that was my wake up signal to say, I mean, you know that's an unregulated market. You know that since the beginning, and that was fine. But under the current market conditions, I can't spend the big money for it. So what is the alternative? To stop trading, or to look for an alternative? The alternative is low volume and to adapt the leverage, because with the leverage you can, of course, artificially raise your volume. And that's the next challenge we have. the current volatility, pump and dump. And that's, it seems, I'm not the only one doing it, and that's the problem. I have tweeted yesterday about the correlation between open interest and leverage ratio and when the price dumps. This correlation is not coincidence. I'm sure it is not. So it's very hard if you want really to trade with low volume but with an adjusted leverage of 2025. You need to be very, very, very sure that your entry price is the optimum and the price is not going to lift up more if you are going to short, for example. And at the moment, I mean, at 25K, that was okay, no problem. To the downside, I have some problems. So sometimes it is fine. I longed this weekend, making good gain. I shorted this weekend, making good gain. Right now, I'm staying away. First of all, because I don't trust the markets. I don't trust these bullish, up, because I see much more than only the market conditions. I see the economical situation, so fundamentals, but I also see the geopolitical situation. And that's much more than just only the fundamentals, because that's another thing why I feel much more comfortable shorting the market than longing it. We know what happened in March 2020 with the COVID crash. It was a very sharp price action, straight down, straight up. That's what happened. That could happen at any time again. At any time. We have so many potential military conflicts. Yeah, some people will say, well, Inspo, that's not new. Yes, it is new. I have started my main specialization, in my study as in international economics was geopolitics. I know that certain conflicts were always there. At the moment, the whole dynamic is rising. And we are very close to get in a bigger military conflict. In case that happens, and the history of the markets have shown that, it will have an immediately impact to the markets. You will not even have the time to close your order. So for me, longing, I can do that for a couple of hours. I would never let my long open overnight, for example. Would never. So that's the thing where I don't feel comfortable longing it, and that's why I prefer to short. But with the current situation, market conditions, that looks more bullish than bearish. It's really, you are trading against the trend. That's usually not the best thing you can do, but the only option I see where I feel comfortable. So I need to trade with low volume, with high leverage, and shorting. Good luck, Inspo. And that's the big problem why I'm staying away. At the moment, I feel like a hunter, waiting, hiding, waiting until I see my victim, and then just to initiate the action. And that's something, it's going to be a big challenge in my opinion, because the markets, I don't know, I think they are in disbelief, to be honest, because the whole situation doesn't look great. Now let us go to the next chapter, what I have mentioned in the beginning of this analysis about the European Union. The European Union has a different challenge related to the inflation. We know the recent CPIs for Spain and even France was showing up that the inflation is rising in Europe, so it's not under control. Well, usually I would say it's okay, it's fine. It's a challenge, but we can do it. No, we can't, because the ECB has much less options in their hands to fight inflation than the Fed. Just to give you an hopefully insightful example, the German government is right now selling German government bonds. Usually the government do that for some investments or if they really need money. Well, what do you think is the German government doing with this money? Well, they are buying Italian government bonds. And do you know why? To stabilize the European Union and to let the ECB raise their rates. Because if they wouldn't do that, Italy would crash and destabilize the whole European Union. In other words, if the German government wouldn't do that, we would be very close to a collapse of the European Union. That's fact. You can prove that. So even that, taking into account the very difficult conditions that the German government has at the moment, with all the sanctions against Russia, with the cut of gas, of oil, and so on and so forth, you can imagine they need that money. And they are spending that money in other things to let the ECB to fight inflation. But even this way is very limited. So you can imagine that the ECB is not going to raise the inflations like the Fed will do. Also, that is going to be a fact. Forget that the Fed is not going to fight the inflation. Not talking about midterm elections and political impact and so on and so forth. But it's fact that the Fed has a goal. The goal is to bring down the inflation to 2%, something the ECB will never achieve. Not under the current conditions. It's not going to happen. It's impossible, because they will trigger a chain reaction. When the European Union starts to look for cash, it's the beginning of the end. And at the moment, we have started that phase already. Unfortunately, I'm European. It sounds really sad to say that, but it's almost game over. Inflation will decline maybe in the next few months, maybe due the energy prices. But even then, we have a supply problem. It's not only to buy the energy. We have supply problems. I mean, I was reading Senegal is going to, it seems, supply some gas or crude oil to the European Union. It's not going to be enough. So that's another topic. If you like this new chapter, because I would like to talk more about, to zoom out, to give you a bigger, sometimes, not always, but give you a bigger view about the whole situation and economical market situations. And if you have, some questions like you did, why I'm staying away, somebody that was trading all the time in the past, I would like to spend those, in our case right now, almost 50 minutes or 10 minutes just to reply to you. However, I will make a separate chapter with these topics. So if you are only interested in the market views and market data, you can skip this chapter and go through to the wealth ratio. That's what we are going to make next. So stay tuned. So now let us go directly to the weights ratio. We can take a look. First of all, before we go through to the weights ratio, what's happening, we see that here DXY is pushing up, more hitting its resistance of almost 106,900, something I would expect in the next few days. And Thursday, when the European Union is going to release their CPI, it would surprise me if DXY is not going to push up. So, but at the same time, we can see that SPY is almost not reacting, and as usual, BTC is following SPY, not SPX at all, only SPY, and at the moment not doing anything. No, it's just pushing up more, as you see. I have tweeted about that, about the gamma neutrality that option traders are reaching, and why they are just buying the dips and selling the pumps. And that's exactly what they are doing related to Bitcoin as well. So let us go forward and let us check what's happening here related to the Wells ratio 30 days moving average. Well, as you see, we lifted up, we are declining right now even more at the moment, it looks like, at least. However, it didn't play out. We are still here in that bullish trend with higher lows and higher highs. We know that usually, and we happened that in the past, could let us go down afterwards, like we had several times. Many are expecting exactly that. I really don't know, because Bitcoin is following SPY. SPY looks very bullish. Some are saying that's a beer rally. Some others say that's the beginning of the next bull run. I mean, a lot of crap is happening in the world at the moment. Not only the inflation and the economy situation, even the geopolitical one, but they are ignoring absolutely everything. Instead, just how a good friend of mine just said, they are trading the internal mechanism. Well, we will see how long they can do that. So, however, the Wells ratio 30 days moving average keeps doing what it has to do. It's declining. It didn't play out. So, like I said last time, it hurts because it's the first time since I'm using it. However, it is what it is. It's not playing out. I know. I mean, we know the big money is dumping or selling into pumps. Maybe that was the reason why the Wells ratio was lifting up, because just indicating a preparation, but not for a nuke, instead just for a distribution, the lifting while the price is lifting up. Let us go forward and check what's happening here. Well, first of all, if we check that here, we can see that the Wells ratio 30 hours moving average lifted up and declined, lifted up, declined, lifted up, and it's declining again. So in my opinion, that should let us go up again, hitting 25k to retest that area. At the same time, I was reading, I'm not sure if that was Bloomberg, but I think it was Bloomberg, indicating that Tether is minting again while USDC is burning. So the net flow maintains, if I'm not that wrong, I mean, we have to take into account BUSD, for example, and net flow is negative, so it matches very well to our trend here. However, Tether is printing again more, and USDC is instead reducing their supply. I don't know why, but everything else is just speculation, theory, whatever. So we are not going to talk about that here. We see also here that the exchange reserves related to stablecoins for centralized exchanges, it lifted up, it declined, it lifted up again. Doesn't look very, I mean, that's sharp, but in my opinion, that's nothing. I'm not sure, but I wouldn't say that was exchange just refilling their reserves. It looks like whales, to be honest. So at the same time, we can see here that the wealth ratio 30 days moving average is now at 88%, while the wealth ratio 1 hour is at 84%. So cooling down, and usually that means it gives us more the opportunity to lift up instead to go down. Let us go and check the flow activity. So let us see what's happening here. I'm going to disable stablecoins first just to see what's happening with Bitcoin flows. And as you see, they are rising. Something very interesting and didn't happen just before. Let us check how much that is. It doesn't look that much, to be honest. Yeah, 2000 Bitcoins, that's okay, but nothing big. And the hour before 870, and the hour before 450, another 800. So it's lifting up, but nothing where I would say we are going to nuke just in the next few hours. I don't know if that's part of a preparation, but that's not big at all. Just look, we had 2700 here, we had here 2800, so it's even less, while we are seeing here bigger outflows, 6000 Bitcoins outflows here, for example, another 2000 Bitcoins here, before we received those 2000 Bitcoins. So yeah, we can go a little bit more down, or at least the volume should rise, but that's it in my opinion. Let us go forward and check what's happening here to the stablecoins. Stablecoin outflows 55 millions here, while 150 millions in, that's big. While here, for example, just before we received those 2000 Bitcoins, 144 millions in outflows, while 58 millions inflow. And if we check, for example, we are talking here almost 200 millions outflow, while at the same time 150 millions inflow. So they are not related to those 2000 Bitcoins. And we need to see, I guess, as mentioned, we should go down a little bit, or at least I would expect a rising volume, maybe even again volatility. So, and that's it. Let us go forward and check the future market. Wow, check that. I mean, the red line, the funding rate, that's crazy. So it declined, indicating they were just demanding more shorts, lifted up, indicating they were demanding more longs, and now they declined even more, indicating they are demanding more shorts. At the same time, we received a bunch of stablecoins, and look that. And I can't tell you who that was. You know that? Yes, you do. Of course, our lovely entity again, very active, and we need to see he is still, or they are still not accumulating. So, but it seems for them the bottom is not in yet. So if we check here what it looks like, let us go forward. Funding rate indicating at the moment, after we received both the stablecoins and the Bitcoins, they are demanding a lot more shorts than longs. At the same time, we can see open interest declined, and my PC, it's lifting up now, and even the leverage ratio declined is lifting up again. So also here both positive. We have a demand for shorts, we have a rising open interest and a rising leverage ratio. At the same time, we received few hours ago 144 millions in stable coins, much less outflows, 80 millions, but 140 just before the funding rate declined that much. At the same time, and that was exactly at the same time, we received 10,500 bitcoins to derivative exchanges, while at the same time 6,500 bitcoins just left the exchanges. An hour later, another 5,500. So the question is someone taking profit and another one is now jumping in, or was that again just really a little short-term operation? Something we need more informations, or at least more time to know that. However, that's very interesting, and usually that happened in the past. Every time when that happened, afterwards the price dumped. So we need to be very careful, like it happened before, but in the opposite. So you can see here what happened to the funding rate. Of course it dumped. What happened afterwards with the price? Of course it dumped. So what happened here with the funding rate? Yes, of course it dumped. What happened afterwards with the price? It dumped. And the opposite. What happened here? Well, that wasn't that big, but here, for example, well, the price went up. The same here, went up, you know? Or here, it declined. Not that much. Well, that here, no. It seems that was because we were lifting up. However, we need to have this in mind because that's really interesting. Let us go forward. You remember I have mentioned that the correlation between open interest and even leverage ratio and the price action. I will show you that on a better way because we have Binance here, and Binance is even better if you want to check that. If we want to check that, we have here, for example, the purple line is here the leverage ratio, the yellow one is the open interest. Let us check what happened here. I mean, I have tweeted about that, but look, every single time. Okay, I need to reduce here some informations. Look that, isn't that accurate? Isn't that accurate? Even here. Look at that. Do you think a whale is going to spend money to liquidate you? And if so, why he should do that? That's a big favor he is doing to exchanges, isn't that? I mean, for sure, if he wants some fear or some FOMO, it won't make sense. But that's, in my opinion, the only way where he can make some benefit of it. However, that's very accurate. At the moment, it declined. So in my opinion, just based on this pattern, we should go up. We should go up again. Then we need to see if the open interest is lifting up again with the leverage ratio, and afterwards they will push the price down again to liquidate as much as they can. But we will see. We will track this chart from now on, also related to futures, like also this one, but that's more the daily one. I can also here go directly to 1 hour time frame, and always when the leverage ratio, even here, for example, the funding rate, leverage ratio, open interest rise, then the price declined. We can see here, for example, the aggregated liquidations of longs and shorts. Like you see, look how many longs they liquidated here. So now let us go forward and let us check how the long short ratio looks like. Wow, wow. What do you think is going to happen if we push up again with 1.6 billion in loans? Well, I think I know. However, we need to be very careful, and it's funny to see that the Ethereum, it seems the Ethereum bears are right now satisfied with the last dump. I was dumping, I was shorting Ethereum as well. I was also one of them and did a nice gain. To be honest, from 2000 to 1900, I was even expecting to see Ethereum even a little bit more lower, just on their main POC of 1880 or something. They missed it, but hey, the game is not over yet, so we need to see what's going to happen next. However, we can see that 1.6 billion to 1 billion is 60 to 40, or here 55 to 45. That's, in my opinion, bearish, but we need to see how that will play out. Let us check Binance, the Kingfisher liquidation map, if we can find here something interesting. Oh, no, it's too early. While it's taking a little bit, we can check maybe, no, we don't check anything. Well, we'll see. Let us get us here. Okay. So what we see again is we still have here that cluster of long liquidation positions very close to our current price, while on the short side we need to go far more, hitting 36,000 to liquidate the biggest liquidation cluster here. Even the biggest liquidation cluster on the long side would be between 20 and 18, so almost at 19,000. But this one looks, in my opinion, extremely attractive if they want to play the same game and liquidate high leverage futures. Something we need to wait for it, because after the last liquidation, of course, we need to accumulate some. But at least it would indicate us a little bit when they are going to initiate the next big move, because sometimes we are waiting hours or sometimes even days, and it seems this correlation looks very accurate. That's something we need to track even more. So let us check FTX and what's doing here. It takes a little bit now. Yeah, it's exactly the same. Of course, on FTX, not the same volume, but also here we need to go down, even hitting 23,500, even 23,000. I have mentioned, I think that was Friday, Saturday or something. I have said 23k looks solid to go down and bounce there. Then someone just sent me some meme pictures like 24k, and then from here we will bounce. Sometimes I feel like you are the analyst and I'm just your follower. I don't know. I mean, I love to exchange ideas, absolutely, but sometimes it feels like pain in the ass. However, we will see. I mean, maybe this guy is right and we will bounce at 24k, but even related to the liquidation map, it looks more that 23k could be the bounce area, even a little bit lower. We will see if that correlates with the exchange walls. So let us go forward to the next chapter. So, oh yeah, I didn't adjust that just because my refreshed computer, I have mentioned that. Okay, so let us see. What's happening here? We have the gamma walls, we have here 25k, still the biggest one. The next one would be 26,000. On the put side, almost nothing anymore, really absolutely nothing, really low and flat. Even here, if we check, for example, we were here at 24,200, the gags 63,000. It's a lot. Usually that gives us a nice option to push more to the downside. We had almost 100,000. That was Thursday, a day before the expiry, so that's something not uncommon. But right now on Monday, with 63,000, I would expect more price action to the downside, or if they really want to push more to the upside, the correction will be bigger. So we need to see. Let us go and check what kind of strategies just came in. Let us check the premium in US dollars, and we see custom strategy 500,000, long strangle 500,000, bear put spread 280, bear call spread 200, bull diagonal spread 190, bull call spread 100. Okay, let us check the notional. Then I would say bull put, bear call, and long strangle should be it. Custom strategy is not that big anymore because they do here 50 million, 40 million, and 12.5 million. This would just be 6.7 million. So those first three would be in my scope. Let us check them. And we will see. 600 lots, almost 50 million. That's absolutely interesting. Almost 600 lots, 40 million. 525 lots, 2.6 million. All these three extremely interesting, extremely interesting. And even, I mean, wow, that was really low bull put spread. Then we need to check also this one here. Even it's just 225 lots and only a notional of 5.4 million. But however, we will check that. So let us start with the bull put spread, then afterwards the bear call spread, the long strangle, and the custom strategy. Then we should be done. I mean, the bull put spread, it's only interesting because of the notional and less because of the premium. We will see, looks like a little bit out of the money, but we will check that. Bull put spread. We have the bull put spread. Ooh, bull put spread 20 puts 2022. Let us check the bull put spread. It's usually a strategy that's neutral or even bullish in price action. So he's expecting at least a price above, it seems. Let us check. Potential profit is limited to the net premium received less commissions, and this profit is realized if the Bitcoin price is at or above the strike price of the short put with the higher strike, means above of 22k. That's interesting, but taking into account where we are right now, it's not bullish. However, it is bullish, maybe I would say, like they said, neutral to bullish. In that case, it's, I would say, I would classify this one as neutral and not bullish. Let us go to the next, because we have the bear call spread. The bear call spread have the same notional, but we have here just a different premium. So their bear call spread, oops, and the bear call spread, wow, Wow. Okay. So let us first of all check the definition. To profit from neutral to bearish price action in the Bitcoin price. Maximum profit. Potential profit is limited to the net premium received less commissions, and this profit is realized if this Bitcoin price is at or below the strike price of the short call with a lower strike. Okay, well, we'll see. Lower 25, lower 25, lower 25, lower 25, lower 25. Okay, this guy is joking, I guess. Lower 25, 25, 25, 28, 32, 32, 32. I mean, we are not talking about huge premium here, but it looks more bullish. But it seems he's expecting a price below. Well, that's, I guess, the bearish definition of this strategy. However, we are only analyzing these strategies based on their main definition. We don't know if that's a follow-up strategy, if that's if that's maybe part of another strategy. It looks like, at least very interesting. I would think that the bull put spread and the bear call spread, it's maybe one and the same person behind, and just checking some volatility and expecting something. So yeah, above 22k, below 25k. I think that's something we know. Okay, long struggle. Let us go to the long struggle and check what's happening here. And also here, let us start directly with the definition. First of all, to profit from the long struggle, the trader is expecting a big price change either up or down. So only volatility. He doesn't care really where the price is going to. The maximum profit potential is unlimited on the upside because the Bitcoin price can rise, of course, unlimited to the upside. On the downside, we have a limitation that's 0. Maximum risk, it's clearly, I mean, if it goes to 0, 0. So what he is expecting here is also such kind of volatility, 20 to 30 until October. That's crazy. 25 to 23, 23 to 25, and so on and so forth. Also here we had now 20 between 22 and 25. Now we see here mainly 23 to 25. So looks like they are expecting, or here 20 to 28. Wow, I mean, that's absolutely peanuts in premium. But however, 20 to 28, that's huge volatility to be honest. However, if we check here, the biggest one is that here he is expecting until end of October between 30 and 20k. So even here, he doesn't really know if we are going more to the upside or more to the downside. He only knows he would expect certain volatility. And that's it. That's absolutely it. Let us go forward. So, market drivers. First of all, we have FTX here. Let us check what FTX is doing. Oh, look. Distribution mode. Still in distribution mode. Just bought a little bit to sell afterwards. Look. Aggregated. Also, look. Hedging. They are selling, but longing with Bitcoin's collateral. At the same time, futures with stablecoin also indicating more to the downside. So the opposite of what we had before, while the price is going up. That's the most interesting part of all. So they are pushing very hard also here with Bitcoin collateral. And at the same time, if we check here, well, I mean, yeah, they are the aggregated would match. Let us go forward and check what Binance is doing here. Oh no. That's the ad-free version. Yeah. So 30 minutes. And also here, let us check. Yeah, it correlates very well with the price. Very well with the price. They sold very well. Someone is buying at least. Otherwise, the price would be at 28,800. So they are in distribution mode, as you see, related to CBD. Someone asked me the difference between CBD and VD. Well, the volume delta, it's something you can check even if you want. I will show you the difference just in a few seconds, because it makes sometimes it makes something very clear. Look what Bitfinex is doing, and that would match very well to the hedging scenario, hedging with Bitcoin collateral, and they are distributing, they are selling. And that's Coinbase. Well, actually I don't need to check Coinbase because I know what Coinbase is doing. Coinbase is always doing exactly the same, almost. Yeah. Yeah. Oh, look, it's up. They declined here a little bit, but it's up, and if you check that here. So that's it. And the difference between volume delta and CBD, the cumulative volume delta, and why it is different. The cumulative volume delta is it's a accumulation, a consequently accumulation of the volume delta. So sometimes it's positive, sometimes it's negative. The net flow then would be, depends what is bigger, then negative or the positive. So at the end, for example, if you are here and you see we had here almost 3,000 bitcoins, okay, a positive delta indicating more purchase than sales, and afterwards we had here 3,240, means between this way, between August 14th and today, they did a cumulative volume delta of 245 bitcoins, indicating at the end they sold, they purchased more than they sold, 245. And that's the big difference, because if we go now to TradingView, and I have here my volume delta, that's only my volume delta. It shows me, for example, here that I have, and you see it's dynamic. You can see that here it's dynamic. It's indicating right now that more sales are happening than purchases. Well, at the moment we have 3,400 by 6,800. So that means that some other exchanges are buying, while on Binance with BTC USDT they are selling 3,400, Bitcoin 3,500. So I would say 40% of the current volume is, they are doing it with BTC USDT. It seems they are using BTC BUSD, for example. Would be also interesting to check that. It seems they are buying with BUSD while selling with USDT. Also interesting. But that's the big difference, and that's why I like both, to be honest. That's much more a trend indicator, while this one gives me a current look to the current situation. When I see that they are, for example, right now they are selling almost 5,000 bitcoins, even more, 5,500, 5,600 bitcoins, while the total volume on Binance at the moment is 7,000. So that gives me a different information. let us go forward and check, for example, some other informations. First of all, entity 8,700 bitcoins. We remember derivative 10,000 bitcoin inflows. That was the the market maker. He also sent here 1,200 and 1,100. That was spot, it seems. If we go here, we see, but his balances didn't change at all. We still have 4,950,000 bitcoins in balance. We can see that these guys, maybe the colors changed a little bit just because I refreshed everything. So let me check you. That's the entity, the market maker entity. We can see that it's lifting up slightly. At the same time, we have wallets with 100 to 1,000. This guys maintains its level. It's lifting up a little bit right now. Then we have those guys here, 10 to 100 bitcoins wallets. They are stabilizing after it lifted up again, also nothing big. And then we have retailers. Those are stabilizing as well. It looks a little bit positive, so indicating they are still buying. And then we have those here. It looks like they are a little bit declining. And then those mainly linked to exchanges, and those are declining. As mentioned, 80% of these entities are linked to exchanges, 20% institutionals, I guess, or other kind of holders, big whales, whatever. And those here are declining their balances. So also very interesting what's happening here. But as long as these guys here are not accumulating, I am not going to flipping too bullish on Bitcoin. Absolutely not. So let us go forward and check centralized exchanges. How does the activity looks like? Crap, just really crap in both areas. Derivative exchanges declining and spot dumping. So they need to liquidate us if they want some money, because it seems the market is not generating enough money for them. If we check miners, for example, yesterday, nothing big. I mean, the big things happen after we went down to our current bottom of 17.7. Afterwards it declined a lot. Now it seems it's starting to lifting up, and the last big one was August 9th, where they, it seems, distributed 3,000 bitcoins, and right now with almost 2,000 bitcoins. That was yesterday, it was Sunday, so we need to see what's going to happen. In my opinion, it matches very well to the price, because they want to sell as high as they can, so as high as they can. And I can imagine it will this week almost go more to the upside. BTC OTC, let us see. Here we see such kind of OTC activity, also very interesting, to be honest. That's the block. Oh, and we have the daily. And the daily is indicating us that the OTCs, it seems, are, yeah, what are they doing? Preparing their sells, it seems. Not here. Well, here you can see that, because that's the fund flow of the network, and it doesn't match to the centralized exchanges, so that would look like OTC activity, and look, that would match very well. While centralized exchanges, the activity was declining a lot. Right now it seems lifting up a little bit. We need to see how far they want to go. And that's it. Let us go forward. So we have Coinbase. They triggered the sell order at 25k. Since then we declined. In my opinion, we are not. We are. Well, we need to see. Everything depends at the moment of SPY and SPX. But in my opinion, we will go more to the downside than to the upside. That's my personal opinion. We have our POC here. Our current POC would be at 24,500. We are on the below, and we need to see. I mean, as you see, Coinbase is waiting here again at 24k, and we need to see. I mean, we tried different times to break to the downside. We failed. So it seems they don't want to let the price go down, but at the same time they are currently here pushing the price to the downside. That's what they are doing here. They don't allow to go to the upside. Let us go forward. Deribit waiting at 25,500. Look, they removed a lot of walls and are waiting at 21,800. So would match to my scenario. Remember the liquidation map and 23k. Here, nothing. Binance Spot. Waiting here, but it looks almost equal or neutral. Waiting here at 23k. And that would be at least the next bigger exchange wall. Otherwise, 25. Look what they are doing. They triggered twice the sell orders, and afterwards even this one here, 25,300 or 25,200, and afterward they reinforced this wall again. Bitfinex Spot waiting at 23.7, and the next bigger one 26.2. They remove, for example, this wall here 25.3. FTX perp here limiting the current candle, so doesn't want to let it down, to let it go down, while at the same time pushing to the downside. So they are, it seems they are pushing the price down to buy. I would say that that's what they are doing at the moment. At the same time, limiting at 24,600 and 25. Well, 18. Okay. That's crazy. Why? Nobody knows. Maybe only spoofing. I don't know. I wouldn't expect 18, but everything is possible with this market. Kraken. Well, Kraken here, everything below 23,500 or above of 25. Bigger volume waiting at 27,400. BitMEX. I need to drink something. So. Also here waiting at 24,400, and at the moment it seems also here bigger at 23,800, but that's it. Also here waiting at 27.7. Binance Futures waiting here at 23.5 and 25,500. Yeah. So also here nothing big. Bitfinex derivatives. Wow. They removed all walls to the downside. I think I will short. They removed all walls to the downside, and we know this guy. Oh, look that. Oh yeah, but why? while on the other side they have started again to push walls to the upside. Okay, if they are distributing at 25, I can imagine they want to push down again to buy. It wouldn't surprise me. We also know that they are closing longs on Bitfinex, so it wouldn't surprise me. Maybe really a nice entry, but low leverage. That's going to be pain. Okay. Kraken futures. Nothing. FTX spot. Only here 27,400. So also nothing big. And that's it. Let us talk about my personal conclusion. Well, first of all, we still see that DXY is, like I said, just with a double bottom. Afterwards, it's lifting up. The first stage would be 106,900. We will see. I don't think we will reach that area today. We have enough time. My expectation is still when the CPI release in Europe, the euro will tank. In such case, the US dollar euro ratio should be in favor of the US dollar, so DXY should go up, and we will see what SPY SPX is going to do. You see right now that Bitcoin is right now trying to go to the downside. I would love to see if Bitcoin can go again a little bit more to the upside, and then to just short, because the Bitfinex walls, that's something that I take very serious, to be honest. They are distributing, they are hedging, in my opinion, with Bitcoin collateral, and they are removing their walls to the downside. That looks solid. So let us go forward and check what's happening here. So first of all, I really hope that the price is not going to go to the downside. I would like to see, well, maybe it bounces here again and goes up. However, 24, 23, doesn't matter. It's nice. I don't know when they want to start. I mean, we have here a POC at 24K. That's not the main POC, but it's a POC. We have another one here at 24,500. So what I could expect, at least we still have these trend lines, for example, and you remember that 22K. We have here another 23K support. So it seems we will maintain that here a little bit. I don't know how far. At certain moment, it should break, in my opinion, to the downside. So let us make two scenarios again. To the downside means here, bounce, maybe up, then again down, and then even more down. So we have that area here, you remember, of 22,400 something. I would see how it reacts at that area first. Even we know that Bitfinex removed the walls there. The bullish version would be maybe a fake breakout, bear trap, go up, double, that's what they like at the moment, double bottom, and then go up to retest that area at 24,700, and then finally go up and retest that area here in my channel. And then we need to see if it really has its break. It's almost 25,600, or it will miss again and then go down like hell. That would also explain maybe, I mean, even that should be my bullish scenario, but also could be a very interesting scenario also with the bearish end. But at the same time, I need to see if we go and make such kind of move and we go up and more up and more up, but not like such way just really, you know, step by step, retest, follow, retest, retest down, retest again, go up, retest, fail here, and then go up more, hitting 27, 28,000, whatever. However, I would expect such kind of move first, like a bear trap first, a fake breakout, because we did here such kind, we missed that, then afterwards they pushed up. I would expect such kind of move first. And that's it for today. I know it was a very long one, also my time, to be honest. But as usual, it was just, first of all, because of the new chapter I will use and only fill if I have some topics to talk about, only for subscription paid members. And you have the opportunity to skip that. After tomorrow or after today, for tomorrow, I will try to make the whole analysis a little bit more short. Means I will check the data before and will try only to talk about the highlights. So to make everything maybe 30 minutes, 35 minutes, for the free ones only 15 minutes or something. Okay, so hopefully it was insightful for you. I would like to see what do you think about the new chapter, and I look forward to see you all together tomorrow again. Big love, your Inspo. See you tomorrow. Bye bye.